I told you, didn't I? I did tell you. Don't say I didn't warn you. We're going to go pretty deep on this one. It might be a long video, but just stick with me. Welcome investors. Welcome to the Nebius Network. Today we're diving into Nebius Group, a relatively unknown player that just landed a massive AI infrastructure deal with none other than Microsoft. Nebius' stock has exploded to record highs on this news, and for good reason. This partnership could be a game changer for the company's future. Let's break down what this Microsoft deal means for Nebius, the pros and cons, and how it could set the stage for even bigger things ahead. So, just yesterday, Nebius announced a multi-year, multi-billion-dollar deal with none other than Microsoft. Under this agreement, Nebius will supply Microsoft with dedicated GPU-powered computing capacity to support Microsoft's AI efforts. It's a huge contract, bigger than Nebius itself, spanning the next 5 years and potentially worth nearly $20 billion if fully scaled. In practical terms, Nebius will deliver massive AI compute power from its new data center in Vineland, New Jersey, starting later this year. The contract runs through the end of the decade, giving Microsoft the option to tap even more capacity as needed. So why did Microsoft turn to Nebius? Simply put, the AI boom has created insatiable demand for high-performance cloud infrastructure. Microsoft has repeatedly flagged a shortage of AI cloud capacity amid soaring demand, even after pouring billions into its own data centers. To bridge the gap, Microsoft has been outsourcing to specialized providers. It already struck similar deals with firms like CoreWeave, another GPU cloud upstart, and even relies on third parties to help power OpenAI's needs. Now Nebius joins that elite club of Microsoft's external AI infrastructure partners. Essentially, Microsoft is diversifying its cloud supply chain, and Nebius has just earned a very coveted spot in it. The market's reaction to this deal was instant euphoria. Nebius' stock skyrocketed to an all-time high on the news, reflecting investors' excitement about what this means for the company. But its share price had already been on a tear this year, and this announcement sent it into overdrive. Such a dramatic jump shows that Wall Street sees this contract as transformational for Nebius' outlook. In fact, analysts are saying that this deal provides unprecedented clarity on Nebius' long-term revenue potential and significantly de-risks its planned expansion. Think about it. A young company like Nebius now has a guaranteed multi-year revenue stream from one of the world's biggest tech giants. That removes a lot of uncertainty and validates Nebius' business model in a big way. Just as importantly, Microsoft choosing Nebius is a huge vote of confidence in Nebius' technology and capacity. Microsoft could have leaned further on its in-house Azure cloud or tapped another big player, but instead it signed on with Nebius. This industry validation puts Nebius on the map as a serious contender in AI infrastructure. One Wall Street analyst even dubbed Nebius the leading neo-cloud player, saying this is further proof that Nebius can beat out larger hyperscalers for major contracts. In other words, Nebius just went from under the radar to being mentioned in the same breath as the cloud giants. A monumental credibility boost. And it's not just talk. We're seeing real financial community response. Some analysts have already responded by raising their price targets for Nebius stock significantly, signaling increased confidence in the company's future earnings. The deal is widely being called a game changer for Nebius. And you can see why. It's a win-win that hands Nebius a massive workload and revenue, while helping Microsoft solve its capacity crunch. Now, let's dig into exactly what makes this deal so special for Nebius, the pros, and yes, a few cons to keep in mind. This Microsoft partnership secures a huge stream of revenue for Nebius for years to come. We're talking about billions of dollars in guaranteed orders, which will turbocharge Nebius' growth trajectory. Management says the economics of the deal are attractive on their own and will accelerate Nebius' AI cloud growth in 2026 and beyond. It's rare for a young company to lock in this much business overnight. Truly a transformative catalyst. The contract is enormous, even relative to Nebius' own size, dramatically improving the company's forward-looking prospects. In short, Nebius's expansion plans just got a huge boost. So having Microsoft as a customer instantly elevates Nebius's credibility. It sends a signal to the entire industry and to other potential clients that Nebius can deliver at the highest level. If a tech titan like Microsoft trusts Nebius with critical AI workloads, other companies will feel more comfortable doing so as well. This deal is like a giant stamp of approval on Nebius's technology, the team, and the vision. So one analyst went so far as to call Nebius the leading neocloud player now, noting that Nebius effectively outmaneuvered bigger cloud providers to win this contract. That kind of validation is priceless for a growing company. It opens doors. Nebius's brand recognition and reputation in the market have leapt ahead by years thanks to this partnership alone. So Nebius's management openly believes this is the first of many such deals. The CEO, Arkady Veloz, said that this is the beginning of a series of significant long-term contracts with leading AI labs and big tech companies that Nebius expects to secure. In other words, Nebius is not treating Microsoft as a one-off. They're gearing up to serve other hyperscalers, cloud providers, and even cutting-edge AI startups that need dedicated infrastructure. Industry analysts agree that Nebius is now well-positioned to win additional marquee customers as it expands its data center footprint. The Microsoft deal basically serves as a stellar reference case for Nebius. We could see the company inking contracts with, say, research labs or enterprises building advanced AI who urgently need GPU capacity. Nebius might even become a go-to partner for other tech giants looking to diversify their AI infrastructure sourcing. This deal has a domino effect. Success breeds success. So the long-term nature of the Microsoft contract gives Nebius a solid planning horizon. They can now expand infrastructure with confidence. In fact, Nebius will use the steady cash flows from this deal and the contract itself as collateral to finance building out more data centers and buying expensive GPU hardware. The company has said it's even evaluating additional financing options to grow faster than originally planned, which is crazy. Good news, guys, for investors. So having Microsoft on board essentially de-risks these big capital expenditures. Nebius now knows the capacity it builds will be paid for. This is critical because AI infrastructure is a capital-intensive business. Thanks to Microsoft, Nebius can invest aggressively in growth without as much a fear of being left with idle servers. The deal also likely improves Nebius's standing with lenders and investors who see guaranteed revenue, making it easier to raise funds for expansion. It's a financial safety net and a growth engine rolled into one. So the Microsoft partnership underscores that Nebius is plugged into one of the hottest markets right now, AI cloud computing. There's a global gold rush for AI model training and deployment capacity. The demand far exceeds the supply, even among the biggest players. By stepping up as a supplier, Nebius is riding this wave at an ideal time. Microsoft's urgency to secure Nebius's services shows how valuable these specialized AI infrastructure providers have become. And this rising tide can lift Nebius further, even beyond the Microsoft deal. The overall pie for third-party AI infrastructure is growing fast. Nebius, with its focus on high-performance GPU cloud services built on NVIDIA technology, is tapping into that trend. Simply put, the wind is at their back. AI adoption is skyrocketing, and Nebius is directly positioned to benefit by selling the picks and shovels needed for this AI boom. So, let's move on to the cons. Keeping the hype in check. So, while the Microsoft deal is overwhelmingly positive for Nebius, no investment is without risks. Here are a few considerations to keep in mind. So, landing a big contract is one thing, delivering on it is another. Nebius now faces the task of rapidly expanding and deploying a ton of cutting-edge hardware. They need to get that New Jersey data center up and running on time. They need to install thousands of GPUs and ensure flawless service to Microsoft. This is a huge operational undertaking for a relatively young company. Any delays, supply chain hiccups, for example, obtaining enough high-end NVIDIA chips, or performance issues could hurt Nebius's reputation. Microsoft will be a demanding client, and Nebius must execute with excellence to keep them, and to win follow-on phases of the contract. In short, Nebius is moving from the promise stage to the execution stage, and the pressure is on. So this deal will make Microsoft one of Nebius's largest, if not the largest, customers. Such customer concentration introduces risk. So if for any reason the relationship with Microsoft were to sour, or if Microsoft's AI infrastructure strategy changes, then Nebius could be left in a tough spot. For example, imagine Microsoft in a few years decides it has built enough of its own capacity and doesn't renew the agreement. Nebius then would suddenly need to find another taker for a huge chunk of capacity. Also, while Microsoft's payments give Nebius stability, they might also limit flexibility. Nebius has to reserve a lot of resources for this client. In essence, Nebius's fortunes are now somewhat tied to Microsoft's AI investment pace. That's not a bad bet, but it's something to monitor. Over-reliance on any single partner can be a vulnerability. So scaling up high-end data centers isn't cheap. Nebius will be spending a lot on new facilities, GPUs, cooling systems, power infrastructure, and so on. They have indicated they'll finance this with the contract revenues and by taking on debt secured by the Microsoft contract. While that's a sensible approach, it does introduce some financial risk. Debt always carries obligations. If anything unexpected happens, say costs overrun or the deal's scope changes, Nebius could feel a squeeze. Moreover, pursuing significantly faster growth than planned could mean burning through cash quicker. Investors should watch that Nebius doesn't overstretch in its eagerness to capitalize on opportunities. The bottom line is that Nebius has to execute its expansion efficiently and manage its finances prudently, so that this great opportunity doesn't turn into a strain on the company's balance sheet. So Nebius may have a big deal in hand, but it's not operating in a vacuum. Other players like CoreWeave are also securing hefty contracts and investor backing, effectively racing to become the go-to AI infrastructure provider. In fact, Microsoft's strategy is to use multiple partners. It already works with CoreWeave, and Nebius is another piece of that puzzle. Additionally, traditional cloud giants like Amazon and Google are rapidly building out their own AI supercomputing services, and they might not be inclined to outsource needs the way that Microsoft has. There's also the possibility that new competitors or even existing data center companies pivot into this lucrative AI niche. All this means that Nebius will have to stay competitive on pricing and technology. Winning one big contract is fantastic, don't get me wrong, but maintaining momentum requires continuous innovation. If a competitor offers a better deal or tech down the line, Nebius will need to up its game. For now, Nebius has an edge, but the landscape can evolve quickly in tech. So Nebius's stock has run up massively on anticipation of this deal's benefits. That's great for current investors, but it also means the bar has been raised. When a stock surges on hype, any stumble in news or earnings can trigger volatility. So Nebius will be under the microscope to prove that it can deliver results that match with its new valuation. If, for instance, revenue from that Microsoft deal doesn't flow as fast as expected, or future deals take longer to materialize, the stock could see pullbacks. Essentially, investor sentiment can swing both ways. Nebius is now a hot story, and with that comes some jitters. Long-term investors will want to see continued execution and perhaps new contract announcements to keep the positive momentum. It's just something to keep in mind. The hype is high, so Nebius needs to consistently perform to justify it. Nebius' management and investors alike are looking beyond just this one deal, and the future certainly looks exciting. Here are the main points on where the company could be heading and what it means for the stock's trajectory. So with Microsoft's deal in hand, Nebius is likely to accelerate its expansion globally. The company has hinted it will pursue growth even faster than originally planned. We can expect Nebius to build more data centers, perhaps in Europe or other US locations beyond New Jersey, and scale up its infrastructure significantly. The goal will be to meet not only Microsoft's needs, but also to have capacity for the next big clients. Don't be surprised if Nebius announces new facility projects or technology upgrades in the upcoming months. The race to add GPU capacity is on, and Nebius now has the capital and motivation to sprint ahead. So successfully serving Microsoft can become Nebius's calling card to win additional contracts. Other hyperscalers like cloud or social media companies needing AI compute might look to Nebius for extra capacity, especially if they share Microsoft's strategy of diversifying suppliers. Likewise, cutting-edge AI research labs, autonomous vehicle companies, or any data-hungry AI startups could be potential customers. Remember, Nebius's core business is providing full-stack AI cloud services to various clients, from startups to enterprises. So it's not solely tied to Microsoft. In fact, Nebius was already serving a range of customers on its NVIDIA-based platform. Now with the boost in profile, Nebius could attract high-profile AI labs or government projects that need large-scale computing. So in short, the pipeline for new business is likely filling up. As an investor, watch for news of Nebius signing deals with, say, an open AI competitor or a national AI initiative. Those could be next, given Nebius's now proven capabilities. So Nebius is uniquely positioned as a European-based AI infrastructure firm with global reach. In the wake of its separation from Yandex, Nebius has been building an identity as a European leader in AI cloud. This Microsoft deal, an American giant partnering with a Dutch company, underscores Nebius's international credibility. It's not far-fetched to envision Nebius leveraging that status to win contracts in Europe or other regions that value having alternatives to the US hyperscalers. For instance, European governments or enterprises working on sensitive AI projects might prefer a provider like Nebius with European roots and data centers for sovereignty reasons. Analyst Alex Platt actually commented that Nebius is beating even large cloud players for sovereign contracts. With geopolitical factors in play, Nebius could carve out a strong niche as the go-to AI cloud for Europe and beyond, especially as nations and companies seek to diversify in their AI infrastructure sources. That geographic angle adds another growth avenue alongside its US expansion. The consensus on Nebius's future is increasingly optimistic. As mentioned, analysts have been hiking price targets on Nebius after the Microsoft news. This reflects a view that Nebius's earnings and cash flow in coming years will be much stronger and more predictable, thanks to the deal. So if Nebius can execute well, we could see further positive revisions and maybe more Wall Street coverage initiating on the stock. In terms of stock price trajectory, the stock has more than doubled this year and saw a huge jump on the deal announcement. Many believe that this could be just the beginning of Nebius's rise, provided the company continues to land new business and scale successfully. One thing to keep in mind, Nebius's valuation will now price in a lot of growth, so future gains might hinge on them exceeding expectations or the AI frenzy continuing. But from a fundamental perspective, the Microsoft deal has shifted Nebius's risk-reward profile favorably. The downside is more protected by guaranteed revenue, and the upside is larger if they capitalize on new opportunities. Overall, the stock's outlook appears robustly positive with a newfound baseline of confidence under it. Nebius's leadership isn't resting after this win. They have a long-term vision of being a top-tier AI cloud provider. CEO Veloz emphasized that the Microsoft contract complements Nebius's core cloud services and will accelerate growth beyond 2026, implying that Nebius plans to be a major player in the AI infrastructure space for years to come. This means developing the next generation cloud offerings, possibly expanding into related AI services, and staying at the cutting edge of hardware, like using the latest NVIDIA GPUs or even custom AI chips down the line. If Nebius executes on that vision, it could evolve into something much bigger than it is today. Perhaps a company that rivals the smaller divisions of big tech in this niche, or even potential acquisition target for a larger cloud company looking to bolster its AI capabilities. The endgame could be very attractive. Nebius aims to entrench itself as an indispensable part of the AI value chain, supplying the picks and shovels of the AI revolution on a global scale. That long-term narrative is exciting and will be a key reason investors keep interest in Nebius high. So, what's the conclusion to all of this? Nebius Group's deal with Microsoft marks a pivotal moment for the company. In one stroke, this relatively new player has proven its mettle by partnering with one of the world's biggest tech giants. For investors, the story combines the wild excitement of the AI boom with the tangible security of a major contract. There's plenty of hype, and much of it justified, as Nebius steps into the global stage with a reinforced growth runway. So going forward, the key will be execution and scaling up smoothly. Nebius has to deliver on Microsoft's needs, continue innovating, and land those next contracts to truly cement itself as a leader. The good news is that the company has a lot going for it. A strong backing, financially and reputationally, a clear market opportunity, and now a track record of winning top-tier business. If Nebius can leverage this Microsoft partnership into a broader platform for growth, essentially riding the AI wave and becoming the go-to provider for anyone needing AI computing muscle, it could very well establish itself as a powerhouse in this space. This Microsoft deal is a game changer, one that propels Nebius into the next league of cloud providers. It has dramatically altered the conversation around Nebius from an interesting former Yandex spin-off to a key player in the AI infrastructure race. Investors will be watching closely to see if Nebius can ride this momentum to even greater heights. As of now, Nebius has turned a corner and entered a new era for its business. The coming months and years will tell us just how high this ambitious company can climb, but the outlook is undeniably bright following the Microsoft boost. That's all, folks. This is the Nebius Network. Thanks for watching. Drop a like and subscribe, and I'll see you on the next one.